Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have an incredible guest for you today. He is an M&A thought leader, a technology evangelist, and an expert in customer loyalty technology worldwide. Please help me welcome to the show, Denis Brosnan, Portfolio Manager at CORA. Denis, welcome to the show.
Thanks, Michael. Really a pleasure to be here. Thanks for having me.
Oh, well, it is great to have you. You guys have so many exciting things going on. But where I want to start, Denis, is for those that are not familiar with CORA, tell me a little bit about CORA and where you guys specialize and kind of how you fit into financial services.
Yeah, thanks, Michael. CORA Group is part of Constellation Software, which is a public company out of Toronto, Canada, and we're probably the largest software company in the world that no one's ever heard of. We own about 1,300 software companies around the world. We have about 50,000 employees, and we have a unique philosophy in that we buy software companies and own and operate them forever. And we tend to operate them as standalone brands. So that's why most folks have never heard about Constellation. And you can look us up on the Toronto Stock Exchange. Our ticker is CSU. But, that many assets becomes a lot to manage, right? And so we tend to subdivide a little bit. And so our portfolio at CORA Group has about 35 companies in it with all kinds of different verticals that you might imagine. And I came to CORA just about a year and a half ago to build a fintech portfolio because that's where my experience comes from. And my portfolio right now consists of a couple of branches. I have assets in the loyalty vertical and also in collections and recovery.
Outstanding. So let's dive a little bit deeper because I find it fascinating. You know, when you say that a hallmark of CORA is buy and hold forever, let's really dive a little bit deeper into that because I think so many times when people say, especially in the fintech space, oh, the company's up for sale. Oh, they got acquired. And then within a year, there was a buyout clause. Within a year, the company's not doing anything. I think your model is a great way to do it. So dive a little bit deeper and talk about what you mean about keeping the same leadership in place and the employees. Share with us, your perspective and why that makes such a difference.
I'm a huge fan. I mean, Michael, I was a private equity-backed CEO for 3 different times, and there are great things about that model too. But once a private equity firm or someone like that acquires a technology company, you're on the clock before they turn around and resell it. And of course, strategics, they have their own reasons for buying companies, but oftentimes when they do, you do see a lot of attrition of employees and things like that. Our model, I think, has the best of both worlds. We have virtually unlimited capital to deploy assets of any size, but we don't bring employees to bear. We're really buying the assets for the technology, obviously, but also the employees and the customer relationships. And because we're going to be the forever home of the asset, we've never sold one of the companies that we bought. That really permeates our thinking throughout. Every company, every CEO talks about, hey, we value our employees, and I'm sure they do. It is really a duty of ours to recruit and develop great talent because we're just going to be stewards of the assets, while we're here, right? And it's going to outlive all of us. And so we have an obligation to develop the place as a great place to work and develop the talent for the next generation that are going to be the leaders of that. So this model, attracts kind of 2 different audiences. We do an awful lot of owner-operator acquisitions. So the classic example is a founder that has built their company up to a certain level and they're ready to sell, but they want to make sure that their employees are taken care of. So our model works great in that scenario. And then the other scenario is carve-outs from big companies where they have assets that maybe are no longer strategic to them, but they want to make sure that their employees and their customer relationships are taken care of, and so do a fair amount of those kind of carve-out transactions as well.
I absolutely love that model because so many people, you kind of get the lip service at the beginning, and then once the transaction is done and the ink dries, then you see earnout clauses and they're not investing in the company and they don't really care about the asset. They had a different strategic purpose. So I'm fascinated by this. And I think for anyone listening, any of the fintechs out there, they should be listening to your model and how you take care of the asset because, like you said, it's going to outlive all of us. So I absolutely love that approach. And speaking of M&A activity, you guys have a brand new acquisition. I believed you announced it earlier in the week. So tell us a little bit about that acquisition.
Yeah, we're thrilled. This is my third acquisition in the loyalty vertical, which we closed this past Friday. We did a carve-out transaction with Cognitive Corporation, where we acquired their enterprise loyalty platform. And it's actually a company that we had done business with for many years. Our Reward Ops asset was a fulfillment provider. And in the course of expanding that relationship last fall, they said, hey, well, maybe would you be interested in acquiring that portion of our business because we're going in a different direction? And so 10 months later, we own the asset and we're thrilled about it. It is an enterprise grade loyalty platform. So it runs the loyalty programs of very large banks and travel providers, and it's global in nature. So it really strengthens our footprint, not just in North America, but also in Asia Pacific and Australia. We're picking up over 150 employees in all kinds of places like Australia, Malaysia, Singapore, Hong Kong, so Dubai, places like that. So that's exciting. And it's a natural fit to our Reward Ops asset, which, like I said, in the past has traditionally provided fulfillment. So if you're a member of one of the programs and you want to redeem your points or miles for gift cards or iPhones or you name it, all of that transaction happens through our technology. It's, of course, seamless to anybody that's part of that. And we're thrilled. And it really fits with our brand and our model because this asset's been around forever. The original brand name was Carlson Marketing. It
Okay.
was founded in 1938, no kidding, by
Wow.
Mr. Carlson in Minneapolis, Minnesota. Later on, it was acquired by Amia and then Cognitive, and somewhere along the way, they lost the branding. Well, we're bringing that back, Michael, and I just love that story. Right? In addition to being the stewards of the business, we're stewards of a great historic brand, and that just fits with our story so well. Folks out in the loyalty industry still know Carlson, very well. So Carlson Marketing Solutions is back.
Fantastic. And again, I love that you're looking back at the rich history. People can easily identify that brand, and you're saying, okay, let's be a good steward of this. Let's bring back this well known brand, and let's really maximize the asset that you have and the skills that you guys and the financial resources that you guys can bring to the table. I also understand that with the loyalty programs, there's the IMA conference coming up next week in New Orleans. Tell us a little bit about that. Will CORA be there? Who are you guys? What are the types of companies that you're looking to meet with?
Yeah, sure. Thank you for that. We're very excited about the IMA. It fits very well with our broad loyalty strategy, but in particular with our advanced in technology asset that we acquired this year, which is also out of Minnesota. I guess Minneapolis is kind of the ancestral home of a lot of loyalty businesses. But Simon Nickel, who's our Chief Growth Officer for Loyalty, and Becky Hill, who's the president of that business, will be down there in New Orleans. I don't envy them because it's going to be quite warm, I'm thinking, and humid. But Vanson has some really super cool kind of turnkey incentive platforms. So one of those is a dealer incentive platform. So we have, for instance, a tire manufacturer that's a customer, and when their dealers happen to sell one of their brands of tires versus something else, they get points for that. Our system, tracks that transaction. Then, of course, they can fulfill those points for gift cards or what have you through the technology. So that's a very cool use case, and it's very light and easy for a manufacturer or somebody like that to deploy. And then, secondly, we also have a use case in employee incentives. So we have a very large meat processor that has for instance, an incentive program. And so if some employee on the line is worthy of an incentive or whatever, a manager can input that into our system. We process a gift card for them and they walk away with that. I don't know about you, but like when I'm on the airline and I get those little coupons I can give out for great service, it makes me happy, right? And so
And
we think that there's a lot of growth for those types of use cases. Advancing systems, are so easy to turn on within a matter of hours. You're using our technology and it's got your logo and your color scheme on there. It's a relatively lightweight and low cost entry point for folks that are interested in, rewarding either their channel partners or their employees.
fantastic. And as you're heading up the fintech sector, what are the things you look for in a company? As you guys are looking to grow, clearly you're continuing to expand in loyalty. You talked about collections, but tell me, what do you look for in a company? If I'm sitting here and I'm a fintech company, I'm the owner of a technology firm, how do I start positioning my company? How do I make sure that I have my ducks in the row so that I would be an attractive candidate for you?
Yeah, great question. The sweet spots for us are we invest in companies that are profitable, that are typically seasoned a little bit. So anywhere in north of, say, 5, 7, 10 years in operation. We're usually looking for companies that have, 3 million in annualized revenues or more than that. We've done transactions as large as $700 million, but most of them are small to medium-sized businesses that we acquire, and relatively slow, steady growth type companies. We're not one of these investors in, the proverbial fintech unicorns or something like that, right? And again, the value propositions for the sellers are that they know we can execute. We do our acquisitions in cash. They know that we're never going to sell their business and that we're going to take care of their employees and their customers.
Well, and I think that three-pronged approach where you're not going to sell the company, that the employees are going to be taken care of, and especially as someone who's been a founder and you have people and employees that you've worked with for a long time, they've put in the sweat equity in those early years that were probably lean and they made some sacrifices to know that they're taken care of. And then with all of that sweat equity, you've built up a very loyal customer base. You want to know that that's just not going to go away. And I've seen with some of the private equity deals, they're not too worried about the customer base. They had a different reason that they were acquiring it. They wanted to take care of this one aspect of their business. So I love the model, and I love how when you take care of those three things, it's a win-win-win all the way across the board. Dennis, you've got other shows coming up this year. You've mentioned MBA Annual. You've mentioned Money. Where are some of the other places and events that people can meet with CORA, and what's kind of some of the best ways that they can get a hold of you and your team?
Yeah, sure. We go to probably 200 plus trade shows, a year. Um, the CORA website has kind of the verticals that we're investing in, and there are links to connect to our marketing groups there. We also do a lot of outreach before shows. When we do that, we will reach out directly to the other providers that may be in attendance, because ironically, when we go to a trade show, we're talking to both sides of the aisle, right? We're talking
Right.
to the customers and we're also talking to the providers. And so, we like to stack our days with 100, 15 or 30-minute meetings if we can. Anyone who thinks of going to trade shows is fun hasn't done it the way we do it, because we're working pretty hard while we're there. But that's the point. That's why we're there, and we want to talk to anybody about anything. And we love to talk to founders that maybe aren't quite ready yet. I mean, the sales process could be quite a ways. And it's also not always the case that founders actually want to exit. Maybe they just want to de-risk the growth model from there, right? I mean, if they went from zero to successful when they had to eat ramen noodles along the way or whatever it took to get there. And yeah, maybe they got from here to here and their growth projections think they can go there, but they don't want to put in all their capital at risk to go do that. I mean, that's a kind of also an acquisition that we can facilitate. So we love talking to all kinds of folks.
Fantastic. And where do you see some of the technology going? What's kind of in store for the rest of the year? What are you guys eyeing? What are some of the things, without giving obviously any trade secrets away, but where do you see the technology in the fintech space growing? And what are some of the things that we should be on the lookout for?
Yeah, I mean, of course, the buzzword is AI, and everybody puts AI in their pitches no matter what. And Constellation's no different. We have some enterprise relationships with some of the bigger AI providers, and so we're working very hard to make sure that we stay current with that, and that those, where it's appropriate, that those things can be baked into our various solutions. But the flip side of that is, I would say too, is we love legacy technologies, right? Things that work, things that are mission critical for the businesses that it serves. And so we are a bit contrarian as it relates to those things. That's not to say that we're not innovative. We definitely spend a lot of money on innovation within our companies. But if there is either a founder or a strategic out there that is looking to divest what they would consider to be legacy technologies, we're a great counterparty for those types of transactions.
Oh, Dennis, you are a wealth of knowledge and information. You are welcome back to the show anytime. What is the best way if people want to get a hold of you, besides going to the website, besides finding your team? What's the best way they can get a hold of you if they want to have further conversations, or you can point them in the direction of your team?
Hit me up on LinkedIn. Um, that's my best thing. I'm up there and pretty active on it. And there's even a link where you can schedule some time to chat if you want to do that. Happy to do that. And love. I'm a people person. I love to talk to folks, and I love hearing founder stories. They just make me very excited. So happy to hear all those I can get.
Well, congratulations on the latest acquisition. Good luck at the IMA conference next week. And thank you so much for being a guest on this episode of the Fintech Hunting Podcast.
Thank you so much, Michael. It was my pleasure.